Last week, NASDAQ ended up almost 400 points, or 2.38% to 17,133 points, mainly driven by the upturn in Nvidia. And Nvidia will today be listed with a 1 to 10 stock split, and usually that means further upturn. But we will get back to that. You are listening to the StockInvest.us podcast as we're heading in for week 24. And last week became a green week for NASDAQ, as I just said, and even Dow Jones was slightly up by 0.29%. But the major amount of stocks were actually falling last week, and last week, as I predicted, became a volatile week, a lot of up and down for the market. And you can expect that trend to continue as we move forward. So what else happened last week? Well, job numbers came in, and for those following the job numbers knows that the unemployment rate increased from 3.9 to 4%. Added jobs increased, but the unemployment rate is increasing, and this week I expect that you will see more of the same. The increase in unemployment rate was not enough to push the market, because we know the stock market wants an ease in the economic data in order for Fed to cut the rates. And if you're a new listener and you get a little confused, so why is it good with increased unemployment rate? Why is it good with less strength in the economy? Well, the stock market works like this. If the interest rates are high, and currently they are a lot higher than they were like 3 years ago, money will flow to where the return is the safest. So they will go to bonds, yields, etc., where they can sit and just harvest a fixed, steady income. While stock market is volatile, it goes up and down. If you invest into S&P 500, you're usually much better off than investing into NASDAQ. So you can personally decide your risk. But this is the general tendency. So the expectations is that when interest rates will be cut, and as you know, last year they said, oh, it will start very early in 2024. Never happened, and now the expectations is that there will be 2 cuts. By the way, Fed will signal a little bit more during the week, but the main eyes will be on Wednesday, where we will have CPI numbers, Consumer Price Index numbers for that will be May. So we will get the May numbers. They're expected in around 3.4%, if I'm not mistaken. I think they will be on the upper end, slightly upper end, maybe even a little bit above. Everyone is expecting inflation to go down, and then for Fed to start cut interest rates. And as interest rates go down, people are expecting money to flow faster into the stock markets, pushing the prices higher. I am not sure that you should expect either of this, and I've been saying that long before interest rates started to go up. I told you interest rates would go up, and my latest predictions over the last year is that interest rates will not be cut like Fed said. They would not start in early 2024, and I am not sure that there will even be the 2 expected cuts this year. I think inflation will remain much more sticky than you think, and increase even more as we move forward. Will be very interesting to see. It will determine a lot of the things that will happen in the stock market. Aside of that, BRICS will soon come with their own currency. It will be very interesting to see. If we go back some 3 years, you remember I told you that I expected Ukraine war to start, and later when we had the sanctions, I told you that would backfire, and how it would backfire, how it would push gold up, gold prices up. So we went into gold around 1,600, gold currently sitting at 2,308 after falling $47 or 2% last week. But I'm not worried at all. Gold will continue upwards in my view. More and more banks are getting into gold as fiat money, the printed money, loses confidence, and even the petrodollar, I've been speaking about this before, how the petrodollar will lose its value, and how that will really change the world as we move forward. We'll not talk more about that in this episode, but these are future expectations and where to put your money. Gold is, in my opinion, very safe, and I am a good, strong believer in crypto. You know that when crypto was halved, what will it be, 1.5 years ago or something, I bought more into Dogecoin, Bitcoin, etc. A few of these small coins, which now are back at these levels. Bitcoin's hovering around $70,000, pushing upwards, and it will go a little up and down, a little bit here and there. But I think the general trend for crypto will continue upwards. Crypto, like everything else, is very risky, but I think it's a healthy idea to have a small portion of your investments into crypto. Personally, I have in the bigger cryptos, but also in a few of these real meme coins like PEP, Shibu, etc. These are just money. I don't play the lottery ticket, so I just play these instead. They are my lottery ticket. Last week, as I said, markets were up, but mainly driven by Nvidia pushing further up. And Nvidia will be listed today with a 1 to 10 stock split. 10 previous stocks. One previous stock is now 10 new stocks. And if we look historical upon these figures, we know that stocks, healthy stocks, because it's considered a healthy sign when the stock has a split, usually outperform the index over the next year. If you look through all history, 1980 and upwards, that's 40 years plus, stocks that had a split usually do double as good as the indexed. So that will be very interesting to see if we go from 2010 to today. It's not that much, it's 5% more than the index, but the general tendency, and that's what we're thinking about here, is that stock which had a split, like Nvidia is doing now, and many people betted on this even when Nvidia was 900 starting to get high, thinking that there is much more room. And here is a little about psychology, which you can learn, take to your heart, because it really works. The assumption of prices. Now, Nvidia, even after the split, is having the exact same price. The stock price is different, but the price of the company, the value of the company and how much it's worth is still the same. But people consider it to be cheaper simply because most will simply look at the price. That is why many companies, for instance, like to be penny stocks, and they list their stocks very low. They want to be penny stocks to have that super fast acceleration. And we've seen this in many of these meme coins that's been put out extremely low prices, and then they just go up like 10, 15, 20, 30,000%, simply because just one tick equals quite many percentage. So it's a game you can play, and many play the penny stock game when they start listing their stocks, and later they have to adapt to the NASDAQ rule of $1, etc. You cannot remain on the $1 for a very long period of time before you have to do a reverse stock split, the opposite of what Nvidia did, where you have to cut the amount of stocks you have to be listed higher. But in general, it's just a simple, very, very simple rule. Cheap stock price often mean that people think that the stock is cheap. And this you can use when you trade, and this has to do with support resistance levels and all of these things. If you're looking for stocks which you are trading high risk stocks, and by the end of the podcast you will get to the $1,000 challenge, where I follow a certain strategy. We go into high risk stocks, started with $1,000 some 7-8 months ago, and now I have $3,188. So I have done very well so far. Will I be able to continue that growth? You have to wait till the end of the podcast. By the way, last week, I still was in Fate Therapeutics. As I said, Fate is listed around $3.67 now. And back to what I said about being cheap. So cheap is considered to have higher upturn. It's easier to get an upturn in a stock which is $3 than a stock that is, let's say, $30 in terms of percentage, how much they increase. And this is a game you can play if you want to find high risk stocks. It doesn't say that it's good investment, it says it's a higher chance of a high return. Because at the end of the day, in the beginning, when the stock is newly listed at the market, it can grow to any level it wants because nobody really knows the potential of the stocks. The higher potential you think it is, the higher you're willing to price the stock. Now everything is betting on AI and Nvidia producing all the major AI components, and that the growth will just continue. So that is the main driver along with attention for Nvidia. But as time goes, everything will turn down to realism. So we had the woke period now for many years, hammering our personal life, leading to the inflations and a lot of things is based on that huge woke culture that came, and woke is going broke. And good is that, because it adds more bad than good. Some elements are good, but most of it has bad elements. Now it is facing its own death, simply because it's not sustainable and slowly going away. So we go from a good idea, the idea we follow, we push money, we push hope, we push everything into it, but as time goes by and we do not get the return that we thought, and we see things go the wrong way, so we get out of it. Happened to woke. And same thing with stocks. After a certain amount of time, stocks will turn downwards to their actual fundamental value. So the longer the stock been in the market, the more it will be about the actual fundamental value. You have to follow the trends of the industry. You have to follow these big trends, which I tried to tell you up ahead, how wars would come, how the commodity market would be strengthened, how you should go into the war stocks, because war and warmongers were having the high positions everywhere, would push the war agenda very high, push buying material in all countries. And of course, then you just invest into war stocks and you rake in all the money being printed and pushed in that direction. So fundamental will over time win much more than technical. So, but for the risky game where you want to have short-term upturn, so cheap usually is the same thing. People believe it's cheap, has a higher chance of having these very huge runs, but at the same time goes easy up, easy down. And we had several examples of this. We had the huge run in GameStop. And now we had the last week also all eyes on GameStop, and GameStop was pushed to heaven, and of course the company then used the chance to print more stocks because they're really not making any money. But it was considered cheap, and adding into the equation the famous kitty, so it was boomed for good days. Well, a lot of talks around different things. Let's get back to the week. So we had a good week for the market. It was green, but as I said, most stock actually fell. And you probably noticed that as well in your portfolio, that it didn't do as good unless you're sitting in Nvidia and some of the companies that pulled the index up. Job numbers came in last week. Market was, as I said, somewhat happy that the unemployment rate got up to 4, but it's not enough now. Everyone is thinking that interest rates will remain high. The reason why I say this is because that starts to put a lid on the level how far the market can go. And I'll just pull up the chart. If we look at NASDAQ, and the reason why I always use NASDAQ is because I know most of you are into tech stocks or heavy stocks, and most of them are listed at NASDAQ, so that's why I refer to NASDAQ as much, and not S&P or New York Stock Exchange, etc. Now, if you look at the chart of NASDAQ, we can see that NASDAQ is in the upper part of the trend. The volume has not been following the market, meaning that the price has been, for NASDAQ, has been going up, but the volume has been falling. There is less and less market, there is less and less participants in the market, the actual trading volume. And as I said, most stocks been falling, and when stocks are falling, people start to lose the interest. There's a very high correlation between upturn, downturn, and volume positions in the market. That's another thing that you just can learn instantly. And maybe the best tips, except using stop loss, which I can give you, is follow the volume, because it's very simple. Volume should follow the stock price. If price is going up, volume should go up. Volume cannot continue upwards forever. Same cannot the stock price. It should have a natural correction down, and you want to see the volume go up, the price go up, the stock, the volume start to fall, the stock go down. If you have a divergence, meaning that the volume is going up, the stock is going down, you have a signal of a forthcoming direction, change in direction. That is one of the best trading strategies I ever had, was finding stocks falling very hard and volume suddenly going up, because that is an indication of a sell-off, so you have that divergence in the volume. One of the best sell tips is when the stock price is going up and volume suddenly start to fall. But in the case looking at the stock exchange, NASDAQ, the index NASDAQ, so the volume now is very low, and the stock price is very high. Now, if interest flows back in market, that can push the index further up. So again, we will be very news driven, and the eyes will be on what Fed says, and I just said that expectation is lower. Now, if job numbers, for instance, on Thursday and May numbers on Wednesday come in higher, and or let's say sorry, it was consumer price index on Wednesday. Let's say these numbers come in the wrong direction, it will be very hard for the index. And right now, everything is indicating that there is very little support until 16,700 points. It's not much, but where it also was heading the last time, has bounced up from 16,700 two times before. If it breaks below that, it's a huge chance that we can see a fall to 16,000. And to sum that up, personally, I think it's a huge chance that might be the scenario, that numbers will not come in this week as expected. We already have a little lid on the market, and the market's been in general doing good, but as I said, driven by a few stocks, not the major stocks, and that we can see what is just a natural correction down. So I am holding my button on red week, actually for the next 3 weeks moving forward, that I think it will be hard for the market to move up over the next 3 weeks. Hopefully I will be wrong. Hopefully Nvidia will continue to push upward, bring the index upwards. Numbers come in very positive and it pushes upwards. I promise not to talk so much about politics in this podcast, but you can bet your head on that as markets, and as in my opinion will have a correction down, they will blame it on different elections in Europe, because right now the population is changing, just like you heard me say in this podcast series. What will happen now? You have that vote going up. Realism starts to kick in when everything costs much more than is funny, and you start to lose your job and all that. So suddenly you change your mind, you go and vote for those who are more conservative. And we see that lots of EU elections going on now, and they go all in the direction of conservatism. And now you will just read over across a lot of media. No, they will blame the market shift for this, but it's just natural. If you do that, you can blame the fall in April for something strange. So we are just very, very high. It's natural correction. It's more interesting if it starts to go deeper down, or we see a major shift in things. What I've been telling you, I feel repeating all of those. The profit margins in the companies are dropping. This week there will be a few quarter results. Nothing really big as we are at the end of the quarter results, but Oracle will be tomorrow, giving a little insight into IT. And I think it was Adobe on Thursday, so we will have another take into how things are moving. But in general, the profit levels are squeezed, and we saw it. I told you even before Christmas, start to notice what the CEOs are saying in their statements, in the transcripts. What are they saying about the numbers? Because some of the numbers were very good, but listen to what the CEO is saying. And they were saying across many of the major companies that yes, we're delivering good results now, but that is because we had a huge stockpile of goods which we were selling out, because during COVID and all these logistic issues, so they ordered a lot of things, then things stopped. They finally got all the orders, got unsold inventory, and now they have been using all their inventory. Now they have to order new inventory at much higher prices. At the same time, inflation, everything has just gone up through the roof. You cannot offset more on the customers. You do the shrinkflation, but you cannot do the shrinkflation forever. I mean, at the end, you have to deliver something to the customer. So profit margins have been really struggling. Saw it more in first quarter, and now we had more other quarters coming in, and I expect for the next quarter season you will really see a lot of this, and that can cause hard markets. So right now, for me, everything is indicating that second half of 2024 might be a struggle, but things might change. We might get out of wars, we might get back to normality, and bringing peace back in the world and prosper. But as is, things are looking, I would say, slow for second half of the year. One industry is still the place that you want to be. 22 minutes talking a lot around different things. Let's start to sum up, get to the $1,000 challenge. And if you like this podcast so far, why don't you like it on YouTube, and why don't you subscribe to the channel so we can continue to grow the podcast and continue to give the podcast. By the way, I told you that this is StockInvest.us podcast, trading tips with Jim, and everything I referenced is mostly taken from our webpage, StockInvest.us, where you'll find a lot of information trying to help you make better decisions to reduce your losses and increase your gains, which is the one thing that we want to do. Now, starting to wrap up things. Personally, looking at the chart, looking at everything, I think there is a high chance of a red week, but you have to pay attention to the numbers, because we are at a level where just some good news suddenly can push the market even higher into more frantic rally. But we had all the symptoms of being upper part. You can look at the short-term chart, you can look at the long-term chart. Everything is in the upper part of the trend. We are overbought on the relative strength index. Everything in the charts, trusting technical analysis, is saying that we should have a stronger correction down. I think that will be starting slowly to eat in as we speak. And so what are tradable in this scenario? Well, if you are that aggressive type and you do a lot of things, maybe think about a few short positions as a hedge. So you can gain a little, if I'm right and the market go down, you can gain a little from short positions. There are even indexes you can buy into which are for beer. And they are usually labeled even beer in the ticker, not in the ticker, but in the company or index or ETF name says beer. So you can look for that beer X3 etc. There is several of these where you can make money in a downturn market. So I think it's a high chance that market will go down. We are now talking the long lines, having a natural correction downwards. Depends how big it will be. Coming up, we have to deal with all the debt accumulated around the world. Fiat money has to be dealt with, how to deal with the trust in fiat money, etc. All of this argues to me that maybe, as I said very early on in this podcast, have a little portion into crypto. Not expect too much, but you might be surprised that it might do good. We will see. Because if money starts to move out, we already saw that move in Asia around the BRICS countries, investing heavily into gold, trying to get away from the weaponized dollar. And maybe you should think somewhat the same, that it could be an upside into things. And if you look at JP Morgan, etc., all of these, what have they done? Especially over the last half year. What have they really done? Well, they have done what I'm trying to tell you. They already done these things. I believe a red week moving ahead, and at 26 minutes, $1,000 challenge, where I try to grow $1,000 as fast as I can. Now here comes today's twist. We bought Fate some weeks back at 357. Last week it went up to 380ish or 90ish, I think, and then fell a little back. Friday was bad for a lot of stocks. Fate also ending the week at 368, setting the $1,000 challenge at $3,188, slightly down by a few dollars from last week. So we didn't make any money in the $1,000 challenge last week. Looking at, and it's not being sold, looking at the Fate, the chart is not the most optimistic chart I have seen. I think it's a much better chance just buy Nvidia and make whatever you make. Maybe they will even do 5% this week, more. They've been doing good, and now with the split they probably will do even more. Hard to say, but I think it's a higher chance in Nvidia than Fate as we speak. As you know, I will always tell you what I do so you can see up ahead, and I will not buy a stock before I tell you which stock to buy. I am in Fate, but this week it's a high chance that Fate might be sold by stop loss. As I said, the chart doesn't look good. This can change very quickly, but it needs to start moving. That's the thing. Last time we had a big one was Snap. As you remember, we had to wait a few weeks, and suddenly everything kicked in just like it should, and we had a fantastic return on Snap. I hope Fate Therapeutics will be the same, but currently, just looking at it, the chart doesn't imply that. Actually, if you head into what I think will happen, I will have into red weeks. Now, I think Fate will struggle as well. So I sit with a bad feeling that it might go to a stop loss, because by stop loss this week, and we have to register maybe even a little. Currently, we sit at 3.08% profit in Fate, that we might even go to a loss now. Now you're really thinking, so he says all about this heading for a red week, think Fate will go down, so why don't you just sell Fate? Take the 3% now and be happy. Well, that is what you should, but over a long period of trading, I know that one thing is what you think, another thing is what happens. That doesn't always correlate. You want to be more than 50% correct. That's where you make your money. You cannot expect to always be correct, but you want to be on the upper end. There is, if you look at a risk reward, I think that the chance for Fate to go up during the week, 50-50. It's still 50-50 is not 80-30, 80-20 or something really good. It's 50-50 in my opinion. Actually, I could almost go to the low end, but having stop loss will make sure that I will not lose more unless something wrong has happened with the stop loss. that I will lose more than I set my stop loss at, and I can afford to lose a few after going from 1,000 to 3,188. I'm absolutely prepared to lose a little bit, since I do not know for sure, and I promise to tell you what I buy next. I will have a stop loss. If fate go up, it will remain in the $1,000 challenge, but if it goes down, it will be cut by stop loss, and I just say that it's a high chance. Then I will let you know next week which new stock I will go into. Should you buy Fate now? Last week I told you if you didn't have Fate, I think there is an upside. Right now that upside isn't as obvious, and the reason for this is that good position where it was low on the relative strength index and had support below and all these things played out nicely. It went, we bought 357, I think it was just around 4, and then started to fall a little bit. Didn't get the market with it. There was not enough good market. Now let's get the, if I'm wrong that it will not be a red week, but we get a push from Nvidia, we get good consumer price index numbers on Wednesday, we get good job numbers on Thursday that the market likes, so we can just suddenly have a very good week, and then Fate most likely will go up. Staying in Fate will be the case for this week. I will try to put on YouTube video in the comment for this video, week 24, if it has been sold. But if it's sold, there will be a new candidate next week to get into. You've been patiently listening for 31 minutes, and I hope you found a few useful things. Again, it's a little bit about longer lines again, and not so much about trading, and you was just jumping into this podcast. So what should I buy now? What stocks? Where should I look? How should I find it? My advice for the week ahead was, I told you last week, I expect a volatile week. Good for trading. And expect the same this week. There will be good for those who day trade. If you can have the patience, if you can be that person who are able to hold back, here is what I would do. I expect markets to move quite much up and down during the week. You will look at the market, not so much about the stock, but the markets in general. You will wait for a good position when market is typically oversold. And when it's oversold, it's typically around 2. When it starts to fall like 1.5–2% down, is the time of the intraday where you should buy, in my opinion. Do not get too greedy, because you will not know what will happen the next day. So I will be shorter on my positions, getting in, getting out. And not sit overnight, because in this situation, like, it's very hard to predict how the next day will be. And the red day, now let's say that the stock market falls down, can continue with the next red day. But if the market falls, let's say that it get into some sort of strong reaction. We had that on, was it Tuesday last week? Market fell down to fell by 1.89%. I just bought, and 2 hours later it was back at 0. Classic movement when there is high volatility, and then ended a little red by the end of the day. You will see the same thing here. Markets moving up and down. You just have to be very patient, not get ripped into the market, because that is where you will experience your loss. If markets get too good to be true, going up 2%, I would sell. Going down 2%, I would buy, or somewhere close to that. That's where I would put my bet. If the market is just around 0, moving up +0 to -0 to, I might hold and just wait for that good opportunity, because there will be during this week. And next week we will see, because then we will speak again if I was right or wrong. Until then, just have a super week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.